Hi, this is Michael Scott. This is the stock movement and comparison stock movement section of the General Motors Binder Report, which we've titled An American Corporation, because GM is quite the American corporation, now owned by the American public for a large part after the bailout. Um, the company's not doing so great. They had a after the bailout, they climbed up pretty high, and since then it's been rough goings, and they've been steadily moving downhill. Uh, the period in which they were tracked for this report was September 10th, 2014 through November 18th, 2014. In that time, they dropped to the lowest market share that they have been at all year. They hit rock bottom at $28.82 for trading, and that's not a good sign for the manufacturer. They are only putting out about $10 to $12 per earnings price per earnings, and anything less than 20 is really showing that it's not really growing at the rate an investor would want. So they are not having a good time. Most of that came from there were several recalls that happened right before this drop you see here in October, down to 29. It was the announcements came out about October 3rd and the 5th, several one after another, which just made the price plummet. That brought those two recalls brought the yearly total for GM down to up to 29.95 million faulty vehicles that they had to pull off the road. That really took a lot of the confidence out of investors, and it didn't help that Goldman Sachs conviction list kicked GM off of it after those recalls, because they did not feel that it was a worthwhile investment. They're, I believe they called it a neutral investment at this point. You're basically just giving them your money. You're putting your money in a place where it's not really going to do much. They don't have the confidence of whether or not it's going to grow or fall. So that's your bet, because they are, as you can see, they're starting to climb, and I can tell you the numbers go back up to where they were before the recall. But whether or not they're going to climb, I mean, to date they're about the same height, but it's not looking like they're going to have any sort of massive growth up there, because they've got some real problems with production that they've got to work out. And as you can see, their daily charts very much mirror their monthly and quarterly charts. I mean, a lot of the same dips, a lot of the same drops, a lot of the same movement. Yeah, it is tough investing in the American companies right now. I mean, I know there's a lot of people out there that want to support the American automotive industry, and they're just not sure, because it is a rough thing to invest in. Though the risk is very high, so you could get in and buy a bunch of shares right now, but you got to deal with the stress of this guy and that guy, and maybe one day you'll be that guy, or this lady, but who knows? Now, another American automotive manufacturer, Ford Motor Company, as you can see, the graphs look almost identical. And it's funny because they were downgraded by Goldman Sachs on the same day, and that affected their stock price equally, hitting the bottom for the year at 13.26. And, their price to earnings ratios are even worse than GM. So, I mean, you're not getting any money back by investing in either of these automotive companies, at least not anytime soon. And Goldman Sachs seems to think that you're not going to get it back for a very long time, that it's a very dubious investment. So things are not looking exactly great for American automotives. This is another comparison slide. Not much difference. There, Ford kind of had a bigger drop from the look of the graph, but they're basically equal. So it's really an industry-wide movement that these two companies are going through, which is not a good one. Where will American automotives go? Who knows? But all we can do is watch the graphs, look at the numbers, take a risk and invest if we feel like it. That's General Motors, an American corporation. Thank you for listening.